please take your seats. Also, a friendly reminder, please turn off all cell phones, Blackberries, and pagers. Thank you.
Good morning. My name is Rosie Rios, Treasurer of the United States, and welcome to the Women in Finance Symposium hosted by the Department of Treasury and the White House Council on Women and Girls. Thank you all for joining us today for what will truly be a historic event, not just for Treasury and the administration, but to all current and future generations of Americans and beyond who will be inspired by today's activities. I would now like to introduce Secretary Tim Geithner.
Good morning. Welcome to Treasury. Thanks for coming. I want to start by thanking Rosie Rios. Let me say it again, Treasurer of the United States. Cool title. Much better title, much better job than being Secretary of the Treasury, I'll tell you that. Rosie's helping lead a national effort to improve financial education, and I want to thank her for taking the initiative to bring this remarkable group of women together to help advance the cause of women in finance, women in business, women in economics, women in finance. I picked up this New York Magazine article last week, the article that asked the question, what if women ran Wall Street? And I thought, now that's an excellent question, but it's kind of a low bar. How, you might ask, could women not have done better? Today in America, 3 of the past 4 secretaries of state have been women. Nancy Pelosi is Speaker of the House, a strong and powerful Speaker of the House, but only 7% of Fortune 500 CEOs are women. Only 2 to 3% of finance company CEOs are women, says Ruth Porat this morning. Only 17% of seats in Congress are held by women. And if you walk the halls of Treasury and you look at the gallery of portraits of my predecessors, or if you look at the past chairman of the Federal Reserve Board, or past presidents of the New York Fed, you'll see a striking similarity among all of us. The federal government still does not provide paid parental leave. Women who graduate from college today get paid 20% less than men despite higher average GPAs. This is not a record to be proud of. Now, the President and the Congress are working to make things better. The first bill, I didn't know this, but the first bill the President signed into law was the Lilly Ledbetter Fair Pay Restoration Act. And the House is working to pass, I think the House has passed, Congress is working to pass a Federal Employees Paid Parental Leave Act. But there are deep disparities in opportunities for women in business and finance, and the business community should have a strong interest in removing those disparities. Catalyst, which is a leading organization working to expand opportunities for women in business, found that companies with more women on their boards outperform those with less women by 66%. Now, our hope is this symposium today will help re-energize an important national conversation about how to improve opportunities for women in finance. This morning, you're going to hear from women who now preside over key parts of the American financial system, who helped shape the government's response to this financial crisis, and who are working to reform this broken system. Elizabeth Warren is one of the most powerful, most compelling, most talented advocates for reform in the country. Mary Shapiro leads the renovation of the Securities and Exchange Commission. Christy Romer, a scholar, one of the leading scholars in the country of the Great Depression, helped this president design the package of policies that pulled us back from the financial abyss and have created the prospect of a growing economy again. And Sheila Bair is now presiding over the most complicated, the most difficult, the most consequential restructuring of the American financial system since the Great Depression. Now, this discussion today is about 2 basic tests of values and governing. The first is about the proposition, and this is something I know the President feels very strongly about, that you get the proposition, you get better judgments, you get better decisions, and you get better results when you are exposed to a diversity of opinion, of background, and experience. The second is about opportunity and about fairness. The critical test of justice in any society is whether people face equality in the opportunities presented to them. the chance to advance and to excel on the basis of merit and effort and drive and dedication. We can all do better on those tests. Now, we've seen a financial crisis that's caused a huge loss of faith and trust and confidence in our financial system, and we hope that's going to provide an opportunity for women to come into this world and help rebuild, help restore that trust and confidence. And as women think about what they're going to do with their lives as they come out of school now, think also about coming to work for your country. Think about public service. You're still going to have clients if you work in government, and the demands that come with clients, but your clients are the American people, and it is a great and noble and consequential and rewarding thing to do. So I hope we see more of you in the halls of government. Thank you very much.
Thank you, Secretary Geithner. It has truly been an honor to serve you and this administration. And I would like to especially acknowledge your leadership and your vision, but mostly your courage for supporting me since my first day that I arrived here in Treasury, and especially for your support in making my dream of the Women in Finance Symposium a reality. We are here to celebrate the 30th anniversary of the National Women's History Project, to recognize the accomplishments of women in finance today and in the past, and to encourage women and girls across the country to become leaders in the field. Today's symposium is an opportunity for dialogue across the public and private sectors with women well established in their careers, leaders in the private sector who will be on the second panel and who also we would like to thank for coming. Women who are well established in their careers and others with their full careers before them, like the students at Stockton College, Pepperdine, and Howard Universities, along with many others engaging in today's symposium via live webcasts. Earlier this month, President Obama issued a proclamation of Women's History Month, which said the following: "As we honor the women who have shaped our nation, we must remember that we are tasked with writing the next chapter of women's history. Only if we teach our daughters that no obstacle is too great for them, that no ceiling can block their ascent, will we inspire them to reach for their highest aspirations and achieve true equality." These words resonate for me, especially today. Never have I been more hopeful for my 9-year-old daughter, Brooke, than I am now. Looking out in the audience of accomplished women and seeing how far we have come. Thank you. But as we look towards the future, we should begin by examining our past. The theme for this year's National Women's History Project is writing women back into history. So it is fitting to open the day with some of the remarkable women in Treasury's past and their significant accomplishments. If you look at the windows lining this room, you will see images of women each telling her story of her contributions to this great institution. The first women were hired by the Treasury Department well over 200 years ago. In 1795, Sarah Waldrake and Rachel Summers were hired as adjusters for the mint and earned 50 cents a day. They weighed gold coins and filed them down to the correct weight. Helen Bennett was the first professional woman hired to work in the Treasury building in 1861. She worked in subterfuge, copying and recording in the name of her ill husband. No one officially acknowledged her existence, as she earned $1,600 a year in her husband's name. 3 years later, when women were allowed into her clerk's role, their salaries were capped at $600. Now, I can say with a bit of pride that it was the Office of the Treasurer which helped truly bring women into Treasury. In 1862, during the Civil War, Francis Spinner, Treasurer of the United States, approached then Secretary of the Treasury Salmon P. Chase and said to him, "I want to employ women." And as was the case for most wartime experiences, when men were scarce, women were hired en masse. Women quickly flourished. Just 2 years after Spinner approached Chase, Mrs. Willard A. Leonard was hired by the Treasurer as the chief counterfeit detector and won nationwide reputation as the female Sherlock Holmes. She gained fame as the most remarkable woman in government, and it's claimed that in her 41 years on the job, she never made an error. The female Sherlock Holmes is one of many exceptional women to grace Treasury's halls. To your left, for example, the first black woman who was hired in Treasury was Sophia Holmes. Mrs. Holmes, a free native of Washington, worked as a custodian in the Division of Issue at $15 a month and became famous for finding and saving the division $200,000 that had been mistakenly thrown away as trash. When she died in 1900 at 79, Secretary of the Treasury Lyman Gage was among the notables at her funeral. Another woman, an unnamed mathematician, hired in the early part of the 20th century, was so bright that congressional members repeatedly asked her to interpret charts and graphs for them. And in 1949, Georgia Nice Clark was appointed the first woman treasurer by President Truman, and the position has been held by a woman ever since. Women have filled other leadership roles throughout the years in General Counsel, Assistant Secretary, and Deputy Assistant Secretary roles. Recent standouts even include one of our panelists, Sheila Bair, who served as Assistant Secretary for Financial Institutions from 2001 to 2002. So as we honor this 30th anniversary of writing women back into history, our goal with the symposium is, with an eye to the past, to begin writing women into the future. Too often, girls are told what subjects they should study, what interests they should have, and what jobs they should do. To all the young girls, students, and young professionals who are watching us today, it's okay to be good at math and science. It's okay to study economics. And it's okay to enter a field dominated by men. We need you. Follow your dreams, and one day you will be the leaders of this nation, leaders in finance, leaders in economics, and leaders in government. And one day, one of you may stand before us as Secretary of the Treasury. The women you will see today on the panels, in the hallways, and on the walls of this room have blazed a trail for you. But it's up to you to reach that mountaintop, and for all of us to help you get there. Thank you. I would now like to introduce our moderator for the first panel, Maria Bartiromo. Our first panel, titled Women Drivers of the Economic Recovery, Pathways to Success, will be moderated by Ms. Bartiromo, anchor of CNBC's Closing Bell and host of the Wall Street Journal Report. An award-winning journalist and author, in 1995, Maria became the first journalist to report live from the floor of the New York Stock Exchange on a daily basis, where she covered breaking news for the network's unscripted and fast-paced business morning program, Squawk Box. She's been an eager supporter of the symposium, and we're very happy that she was able to join us. Maria?
Thank you very much. Great to see you all. I am thrilled to be here with you and honored to share the stage with the women who are on their way up. But first, we're going to take the podium down. Sheila Bair is chairman of the FDIC, Mary Shapiro, chairman of the SEC, Christian Romer, head of the President's Economic Advisory Council, and Elizabeth Warren, overseeing the Congressional Commission on the TARP program. Ladies, great to have you here, and thanks so much for having me here in Washington to talk with you. Again, I'm honored to share the stage with such accomplished women and the senior women of the administration and government today. I thought we'd start by just giving us a sense of your day-to-day. We want to have a couple of goals accomplished today. Number one, we'd like to talk about your road to where you are today. Certainly, we'd like to get a lot of feedback from everyone in the audience and on Twitter and on email, get your questions answered, and we'd also like to talk about the environment today. So, Elizabeth, can you kick us off? What is your day-to-day like? Tell us about your job.
Well, remember, I'm talking governance. Am I adequately wired up here? Okay, ladies, take out your machines. There we go. I still teach classes.
And I'm located still in the academic world. And so my days consist of things like teaching and office hours and the like. And in addition to that, I do the Congressional Oversight Panel. We turn out a report every single month. It's like doing a term paper every 30 days on some aspect of TARP and how the money's been spent and whether or not we're accomplishing the goals we should be accomplishing. And the third thing I do is that I continue to work on my academic research and to talk about it, since I've been talking about the economics of middle-class families for a very long time now, to advocate for change in the financial system that would be helpful to those families, sort of take them out of the line of gunfire that they've been in.
Do you pinch yourself having achieved what you have?
Do I?
I mean, how does it feel? Do you pinch yourself that you're in this position?
You know, I find myself amazed all the time. But listen, I have to tell you, I've been amazed for 25 years.
Still in amazement.
I'm still amazed. I wake up every morning, and this is the truth. You know, in that instant when your brain is awake but your eyes haven't opened yet, and I think about what I'm going to get to do today. And my eyes fling open and I'm ready to go.
That's great.
Because I'm always amazed by what I'm going to get to do.
Christina, how about you? Tell us about your day-to-day.
So I'm listening to Elizabeth's description. That used to be my day-to-day.
Yes.
And that all changed pretty radically a year ago, January. So my day-to-day is incredibly varied. It often involves meeting with the Secretary of the Treasury and the other people on the economics team, often with the President. It has certainly been an incredible year of economic issues. I think never has there been a time when economics was as front and center. Everything from the recovery, but to financial rescue and now regulatory reform, to health care. I think that's been probably, you know, the part of my life I least expected was, I think somebody said, no matter what kind of economist you were when you started, when you come to Washington, you become a health care economist. That is the #1 issue affecting the budget, affecting people's lives, affecting the economy. And that's certainly been true for me, and it's, I think, been a role the CEA has had to play.
So every day you get up and you have meetings on the calendar with the Secretary of the Treasury, with the President of the United States. How many times a week do you meet with those two individuals?
I see Tim almost every morning, so we both are there as senior staff. And then, you know, I think in a typical day, there's at least 1 or 2 meetings on economic issues with all of the economic principles. And certainly in the beginning, it was every single day with the President. Actually, my husband once, I came home one day and I said, oh, I can't believe it. I had to meet with the President for 3 hours. And my husband said, I listened to what you just said.
Exactly.
But I had work to do. But anyway, so I have the pinch me moments. And mine is usually I'm walking into the West Wing and sometimes you just want to go, I can't believe I'm here.
Amazing. Don't you hate when that happens, walking into the West Wing and having... That's terrific, Christina. Mary, you certainly have great endeavors on your plate. Tell us about your day-to-day. What does it look like?
Probably 3 words: meetings, meetings, meetings. But I think of them as breaking down into what I view as my 3 jobs at the SEC. One has been to kind of reinvigorate and redirect the agency back towards its core mission: investor protection, market integrity, bringing in new leadership, trying to change our culture a little bit. The second has been to be engaged in regulatory reform and all the legislative proposals that we've been commenting on and working with Congress and the administration on over the past year. And then the third is to really launch the SEC's investor-focused agenda of rulemaking and enforcement cases. So while it's all meetings, it's on lots of different subjects, which makes the job fascinating, and in these really 3 major areas of interest at the moment.
What's most extraordinary about all of you is that not only do you have enormously important jobs and enormously important issues on your agenda every day, but we are in this particularly amazing moment in time and have been for the last year, and you've all been so critical to the economic recovery. Sheila Bair, your job as well. Amazing the number of banks that have failed, that you have been showing true leadership in this recovery. Tell us about your day-to-day.
Well, we are, bank failure is obviously our first and foremost on our minds these days, and always making sure that insured depositors are absolutely protected, as they always are and have been throughout our 76-year history. So we spend a lot of time making sure we identify well in advance banks that will fail and planning appropriately and making sure it's a smooth transition for bank customers when that happens. We're currently evaluating the structures we use to bid out failed banks to see if we can get some better pricing as the markets recover. we want to get a little more innovative in what we're doing, including perhaps launching some securitizations. We also have an insurance component. The FDIC actually is a very complex entity. We have a receivership function when banks fail, taking the banks over to make sure insured depositors are protected. We have an insurance function. We charge banks assessments. We charge them premiums for their deposit insurance, and we adjust those on the basis of risk. And so now we are reviewing our assessments based on the experiences and things that we've learned as a result of this crisis to perhaps readjust some of the elements of those premiums. And then obviously we have a supervisory function too. We're the primary supervisor, federal supervisor for about 5,000 state chartered banks. So all three put together, it keeps us busy. And like Mary, we've been very engaged on financial regulatory reform on the Hill too, and that's taken a lot of time, but it's time well spent. And I think we're very close. I think bipartisan reform is within our grasp. And we'll work with the Treasury and the SEC and all the others to try to get to the finish line on that.
Do you think women bring something specific to a role? You know, when people ask me to speak at women and money events, I sometimes say, look, thank you, but that sounds like marketing to me. That, you know, we all want to invest and save wisely for the long term, men or women the same. But then again, women and men are different in their approach to things. What kind of different value added do you think women bring to the table? Anybody?
If I could answer that in the context of developing countries, perhaps this is fresh on my mind because I was participated in a wonderful program recently called Vital Voices, which recognizes women throughout the globe who have taken heroic steps to help other women. And the woman I gave the award to had launched a microfinance program in Pakistan, and the overwhelming majority of the small business entrepreneurs who were borrowing money from her in these very small increments were women. And she talked about the incredible multiplier effect in lending to women in these developing countries has, because not only does it start businesses and provide economic output, but the money tends to stay in the family and is applied for children's education, health care, whatever. And sorry guys, but it's not so much when the loans are made to the men, and the women are better credit risk too. They do a better job of repaying their loans. So I think in that context in particular, I think women's attitudes is money towards money to produce value, to support families, to provide that social benefit to their entrepreneurship, I think is really proving itself out in developing countries.
So that a little more conservative view as far as saving and investing from women is...
And keeping it in the family, yes.
Christina?
So I'm not sure that there's, you know, in the economic policy making realm that there's that much of a difference. I think mainly it just doubles the talent pool, right? If you can make sure that you have, you know, all of the talent that's out there represented in the policy process, I think it's just very helpful.
Go ahead, Elizabeth. Did you want to say something?
I was going to say, I'm with Christine on this, and yet I think sometimes there are different perspectives that women bring to the table. You know, I think about a conference that I went to. It's been several years ago, but you'll understand the connection. And now that was on financial innovation. And all of the conversation about innovation was exclusively about mortgage-backed securities, asset-backed securities, right, derivatives, derivatives squared and cubed, and all these really cool things. And it was only the two women in the room who wanted to talk about what financial innovation has meant at the household level, at the family level, where innovation has meant things like liar's loans and you know, credit cards that nobody can understand, and new forms of tricks and traps and, you know, other things that I've written a lot about. But the point is, it was as if, indeed, this point was made rather directly by one of the men running the conference. No, there's only one view of what constitutes innovation. There's only one perspective that we want to bring to this, and this is a kind of macro, moving big money all at once. And the notion that what happens at the family level, both as a driver of the economics and in the fallout from some of the things that were happening, was just not on the table. Now, you know, can a man see that? Certainly. There are people who do. There are people who care about this. But as a group, it seems to me that women are more willing to raise those issues.
That makes sense, because you're coming to the table with a different set of tools, being, you know, the head of a family. So you're thinking perhaps a little differently.
I guess I would add, though, that I think that diversity of experience, whether it's diversity of experience because of your gender or your socioeconomic class or any other reason, is what's really important here, and that we get better decisions. Secretary Geithner cited the statistic about boards with women tend to perform better. I think when you get that diversity of views and that willingness to challenge the status quo that you often get from people who are new to an area, whether it's women, whether it's other groups, that's a really good result at the end of the day. And so I think it does double our work pool, which is a terrific thing, but I think it also gives us just some different perspectives that ultimately will lead to better decisions.
And you've all had various roles on your climb to this position right now. Have you faced barriers as a result of being a woman along the way? What kind of tough situations did you face, do you think, because you were in a boys' club?
Oh, what kind have you not faced? You know, I mean, besides being the only woman at how many different conferences, I mean, the good news is there's never a line in the ladies' room.
Unless sometimes the ladies' room was in the basement, like the New York Stock Exchange.
Exactly right. Been there at those meetings. But I think when I was very young and started teaching in a field like this, there were people who not only thought, but who were actually willing to say, you, in effect, must not know what you're talking about because you're young and female. And so...
How did you react to that?
You know, it's funny. I actually remember a student who was older than I was and who had made a lot more money than I was ever going to make in my life, and who had come back to school. And I was just a baby teacher. And I was teaching commercial transactions class. You know, boy, that's the serious stuff, and you put business deals together, and here's how you finance them, and here's how it works. And as I would teach this class, a huge class, and as I would teach this class, I could still remember where he sat. I could pick the seat in the room if we went in there, the third one over, second row. And he would say, yeah. While I would teach. He's like, oh. And, you know, as I would keep teaching. And so this went on for a couple of weeks, and I just thought, I'll ignore this. Come on, I'm bigger than this. I can manage this. Until the day came that a group of students came to see me. And I won't give you the full version of the story, but it ended with, Professor Warren, this shouldn't be happening. Give us the word, we'll stop it. And I thought, so this really does disrupt the entire dynamic of this class of 100, 160, 165 people. And so the next class, we had Socratic dialogue and really examined how much he knew about finance. And it turned out I really knew more than he did. And everyone in the room kind of calmed down. But I think the truth is, I think we ignore this unpleasant truth. Sometimes what's required is that you just have to lean back and sock somebody in the mouth.
Wow. Get going.
Sorry, but it is part of it. And then everyone can relax and say, oh, everybody here knows what they're talking about. We'd like that. Come on, Christine.
Come on, give us your stories.
You've been there.
I have been there. I think in many ways, I mean, again, economics is something that is opening up, and I think it's really just a triumph that, you know, now when we look at the job market of new PhDs coming out, very often the very top few candidates are women. So I think it is a world that is changing. I think in macroeconomics, which is my field, it's actually still very male-dominated, and I have exactly the same experience of the only woman in the room or one of two, and it is somewhat isolating. I think, you know, the other place where I feel it's a disadvantage is not so much in the, you know, the obvious professional. At the conference you're presenting, people listen to you, but it's much more the casual, the forming co-author relationships, those kind of things, where somehow there is still a barrier, and I think it is something that is hard to get over. I think the other thing that I have definitely noticed in the White House and elsewhere is just difference in how people communicate, right? I've never had to interrupt people before in my life, right? This is sort of just simply the aggressiveness or the taking turns.
You've got to push your way in there.
Sometimes you got to just speak up, even when there isn't a gap in the conversation.
You know, Isn't it interesting that, and I thought this stat was really interesting, that 60% of the higher degrees today are going to women around the world. Even in Iran, where they're covered up, you know, you've got 60% of women getting the higher degrees in law school, in business school, in med school. And yet, we get all the way there, after all of that training, we get the job, and we make 20% less than your male counterpart. Why is that, you think?
I think it will take a lot of time. I was, just to remind you that the first time I stood up to give a speech as the chairman of the Commodity Futures Trading Commission a number of years ago, talk about a male-dominated industry. I mean, the derivatives trading and commodities trading was surely that way. And standing up there, giving my maiden speech, and searching the audience for just one or two women I could focus on when I was talking, thinking there would be empathy. Sheila was there, thank heavens, thinking there would be some empathy for the position I was in. But I do think it gives you a certain resilience and a certain toughness when you have to go through those very isolating experiences in a field that's particularly male-dominated. I think on the compensation issues, I think it will take time. I mean, clearly most law school graduates now are women. I'm sure that's increasingly true in other finance-related fields. And at some point, the balance will tip, and women will be in a position to be paid equally with men. Why it hasn't happened yet is a bit of a mystery to me, and really an unfortunate circumstance.
Is it still because we leave to go have babies and then have to come back and start at square one? I mean, no, seriously, that was the reason that everyone, you know, gave over the years, that women leave the workforce, have babies, and then come back and have to start at a lower level or a lower pay scale. Would you say that's the reason, or is it something else? From now on, I think when I'm interviewing CEOs, I'm going to ask them, so if you were hiring a man or a woman and the same resume, would you pay the woman less? Just put some embarrassment out there.
I think there's a tendency with some, not with all, with some to value us less, whether it's our opinion, whether it's our work product. I think there is that kind of a still perception there, and so I think you just recognize that as a fact of life, and you have to work harder and excel at your job to make people recognize you and make people realize the value of your work, because your work is valuable. I do think there's some, yeah, I think the motherhood thing can weigh against us. I think the perception that there's a guy at home that's going to be making as much, if not more money, you don't need it as well. I think that is probably still there too. Though those are not legal anymore to consider those, but they're probably, with some, not with all, with some probably still there. But I do think...
So the employer is looking at you saying, look, you've got a husband, they're making a lot of money too, right, or they're making, you're fine.
Right, yeah, somebody else will take care of you. Right, exactly. So, but I will say, I think being a woman has a lot of advantages too. I will say that, and I think yes, it is. I think you know, it's always depending on who you deal with. But I know early in my career, I received a lot of mentoring from Senator Bob Dole, who I worked for, and I think particularly that World War II generation of fathers who had daughters and were in family situations where it was not accepted for women to go out and work. I think there was a special recognition by a lot of them to support and mentor young professional women. And I know I benefited from that and probably got some extra attention I wouldn't have gotten if I had not been a woman. So I think, you know, with anything, you are who you are, and with some people it'll help, some people will hurt, but I think the most important thing is to just do your job and do it well, and ultimately you'll succeed.
That's great advice. We want to get to all the questions from the audience, as well as we've got a lot of questions coming on, people who have tweeted. Is that... Yeah, they've tweeted on Twitter, and I'm just kidding, and on email as well. But let me get your state of the states before we go into that. Christina, if you had to talk to college students or MBAs right now coming out of school, what would you advise them? Where are the jobs? I mean, this is a tough economy. We all know that. So what would be your best advice for people today?
Well, I think, you know, as Secretary Geithner mentioned, I think we are on the road to recovery, and I think that is a lot better than where we were a year ago, which was certainly a very frightening time. You know, so I think what is true is the economy is growing again. It's still going to be a very tough job market for quite a while. I think that is the sad reality, and I think, you know, I'll put in a plug. I think we need to be doing as much as possible to try to make the unemployment rate come down much more quickly than it is and is likely to. So I think that's important. For young people today, I think it's probably what Sheila just said. I think perseverance is going to be important. I think being flexible is going to be unbelievably important in a tight job market. The ability to get the ideal job in the ideal place is probably going to be much harder. So you're going to have to just say, let me make the most of where I am now. And
So on a practical level, if I'm coming out of school, what does that mean? In other words, where are the jobs?
So I think, what is still true, education and healthcare are the fields that have grown through this whole recession, and we certainly anticipate them continuing to grow. I think in a lot of the professional services industries, that's going to continue to grow. I'm hopeful that manufacturing will come back, and I think there's going to be, roles there for both managers, for the people coming out of college, but also for workers looking for a well-paying job, even with just a high school education. So I think those are all reasonable prospects.
Any other thoughts on people watching right now wanting to get ahead in their job or coming out of school?
The one thing I would add is that obviously getting the job is critical. But getting a job in something you love to do is really the right answer for sort of long-term economic success and long-term happiness. And so I understand there are some limited opportunities right now for young people coming out of college and graduate school. But if you can focus on what really gives you a sense of excitement, that desire to wake up every morning and rush into work, that's really the right way to go.
Yeah.
I also would point out, it's a good time to think about getting more education. I got to put in a plug for my biz. But it is. It's a good time to go back. When there aren't lots of good jobs out there, then go get some extra training. Go get a master's degree in something else. Go get an undergraduate degree. Go get an AA if you don't have one. But now's a good time to build your credentials, to expand what it is that you can do. The second thing I'd say is you can also look at this really lousy job market in a different way. And that is, no one holds it against you if you don't get the kind of standard job next in line for you. People say, oh yeah, wow, it was a really terrible job market, which means you can be a lot more creative about the sorts of things that you can take on. Go work for somebody interesting. And maybe it doesn't look like a great job on paper first time out, but if you're working with somebody interesting things happen. And you'll have other opportunities that will open up once your foot's in the door. So I think this is really an opportunity to say, maybe I had this grand plan for how I do this for 5 years and then this for 10 more, and then I'd be on this path that I could see in advance. Let me tell you, the most successful people I know, the path doesn't look anything like they thought it was going to look back when they started it. Everyone has reshifted and redone and replayed. Recognize that right up front and just work out your own 2-year plan. Just say 2 years, and at the end of 2 years, what would I know that I didn't know now? Where would be a job that could make me a kind of more interesting, more thoughtful person than I was?
Because, the truth is, Christina, there are areas that are in need of new help. And Mary, you have to love what you do. And that's the only way you're going to work really hard at it, right? And then maybe get a little luck. And Elizabeth, everything's changing.
It is.
So you need new skill sets. Yep. And you may need new training. Any thoughts on that, Sheila?
Well, we're hiring. We've grown from 5,000. We're highly counter-cyclical. So yes, FDIC.gov if you are interested in
and
a job.
And I guess you're bulking up too, right, Mary?
That's right. Sorry, Sheila, go ahead. That's okay. No, I really have nothing to add. I think that's right. You need to be flexible now. And for those who've been in the workforce or maybe having some problems in the current job environment, I think going back and getting an education is absolutely the right move. We will get through this. I think Washington is very focused. The administration certainly is very focused on unemployment. And that is, I agree with Christina, the central issue right now. And so we will get through this. And I think doing something that you love or that will lead to something that you will love, I think is a wise goal. But for now, you probably do need to be flexible.
But I think we're only half jesting. Public service is really
it is
a wonderful opportunity, and it's so enriching and rewarding that people should really consider it. Even if you thought, I'll never go be a government bureaucrat, there's a lot to commend it.
Do you consider yourself a government bureaucrat?
Nope, not a bit.
All right, here's a question from Jack Ackerman from Richard Stockton College of New Jersey. What is the best path you feel a fresh college graduate should take in this economy, private sector or public?
Yes.
Yes, means both?
Whatever looks like the right job. I just think, I don't think they divide in that way. I'd sure put my resume in both places and see what kind of opportunities open up. Because there's good stuff in both places, and frankly, there are really boring things to do in both places. So
it really doesn't, you don't want to distinguish. How about this one? Here, this is from Megan Carr, Richard Stockton College of New Jersey. How has the role of women in any type of job changed since you started participating in the jobs market? Has the role of women changed?
Well, I think there absolutely are more opportunities. There's more work to be done, but I think we are taken more seriously. We are given more opportunities for advancement. We do have a seat at the table in more of the key meetings, and we still have to, to fight to get into the key decision making. But there are a lot more opportunities. It has changed, and I think that's going to continue. I really do. I agree with that. Anybody else? Nothing else has changed. What are some of the positive effects women bring to the financial sector? We probably touched on that, but as far as the financial sector in general, do you still find that you are one of the few in a sea of suits, or mostly male-dominated in all of your roles? Probably,
yes.
right?
Yeah. I mean, it is changing. I mean, I think, I'll actually say one of the nice things about the White House is I actually have more women around me than I had in my academic life. And so it has, at some level it's just natural interaction, but there is, I think, a special bond. And I definitely have the sense of each of us looking out for the other a certain amount, and I think that is really fantastic.
Is that by design? Did you set up lots of women around you as well as men, or did you set that up?
I mean, certainly when I hired, I was trying to look for the best people, and in many cases, the best people were women. I think I give the president and the people organizing the White House a lot of credit that they were, as I mentioned earlier, looking broadly for talent and found it in some unusual places, and it's just a fabulous environment.
This next question is more about the state of states and really where are we? And it also brings women into it. This is from Jacinta Duttenhofer, Richard Stockton College of New Jersey. What are some specific ways you believe pending changes to financial and banking regulations will help the American people and help the financial system on sound footing? So being a woman aside for a moment, what's most important in terms of financial reform?
Wow, well, there's a lot that's important about it, and it's an opportunity for us to do a lot of things better, I think, going forward. I think the focus on consumer banking, and Elizabeth can speak to that with tremendous knowledge, is going to be very important for women, for households, for Americans going forward. I think getting the largely unregulated over-the-counter derivatives under the regulatory umbrella is an absolutely critical step for us to take. The focus on systemic risk regulation, resolution of financial institutions, all of those things are really very important. And closing some of the gaps that have been created over the years that really allowed our economy to end up in really the dire circumstances we have found ourselves in over the last couple of years.
How will derivatives transparency impact the average guy or gal out there?
Well, I mean, we need to look only around at the carnage on the street, largely as a result, in some cases, of over-the-counter derivatives, but the extensive relationships between financial institutions, largely through the counterparty risk that they created in these over-the-counter derivatives, brought a lot of institutions right to the brink and impacted the availability of credit, the soundness and trustworthiness of financial institutions broadly.
But it's important to remember that I couldn't leave this without putting in the plug, that this crisis started one lousy mortgage at a time. The raw material that got fed into the system were these really terrible mortgages for which there were some people who walked into them eyes wide open and said, I'm going to roll the dice here, and a system that permitted that, and on the other side, people who walked into these things and had not a clue what was happening to them. Always important to remember about the subprime mortgage crisis. The first wave of selling subprime mortgages was to people who already owned their own homes and managed to get themselves refinanced right out of them. So the consequences of the kind of consumer credit market that has evolved over the last 30 years. The notion of making profits, over fooling people, over tricking people,
has led not only to the destabilization of American families, it's led to the destabilization of the American economy. We dial that back with a Consumer Financial Protection Agency with two-page credit card agreements and mortgages that people can understand and compare. We make a huge difference at the family level and at the economy level.
So that Consumer Protection Agency will be able to oversee and ensure that those bad mortgages, those mortgages on properties that aren't worth what they said they were worth, will ensure that that doesn't happen again.
Yeah, I think that the key way to say it is it actually repairs a broken market. The design is not to say thou shalt not. The design is really to say both parties to a transaction, the lender and the borrower, ought to be able to understand the terms, and the borrower should be able to tell what the costs are and the risks are up front, and should be able to compare, say, 4 credit card agreements or 4 mortgage agreements, and which one's cheaper and which one carries more risk. If we can get that basic part of the transaction back in place, I think we count on American families to make pretty smart decisions in general. And we don't need a heavy hand of regulation. We just need enough support to get this market working in the right direction.
I just wanted to follow up on something that Mary said, because I think we can all see how important a Consumer Financial Protection Agency is. But I also think just coming to what sounds like a, big amorphous resolution authority, or making sure that someone is, regulating the big systemically important financial institutions, those are basically family and jobs issues, right? So what we are living through is, as Mary said, the carnage of this system breaking down. And I think the reason we are also committed to moving financial regulatory reform forward is precisely to make sure we are never in this position again. Or just as, our grandparents, I guess, in the Great Depression gave us 80 years of a system that was stable, we need to put in place a regulatory structure that will give us another 80 years.
But we will, right? We'll see it more bubbles. We'll fall in love with something again, and it will create euphoria and it will be overdone again. I mean, don't you think?
Yeah, there are always cycles, though I think the bill that's moving through, has passed the House, that's moving through the Senate, will give us better tools to tamp down on those before they occur, and then when there are failures, better tools to deal with them and avoid these terrible bailouts that have created so much political controversy and undermining of public confidence in both the financial institutions as well as the government. So I think it's just common sense. It's making loans people can afford to repay. It's having some transparency and basic policing of the derivatives markets, which magnified the losses once the loans started going bad. I hope, though, that we've also had a bit of a paradigm shift in terms of how the country views regulation. We went through so many years where regulation was viewed as a way to stymie innovation or creative competitive disparities. I mean, how many times did we have this argument? And regulators are, it's good to pass new laws and come up with better structures and better regulatory tools, but unless there's political support for regulators to use those tools, it just won't work. And the reality is that there were regulators as this thing kept getting out of hand, trying to curb it back, and got no political support and a lot of political opposition. And even now, as we're coming out of the crisis, there is still pressure not to regulate. And so I don't believe in prescriptive regulation. I believe in free markets. There's a difference between free markets and free-for-all markets. You need some basic common sense regulation and some rules, and have the rules enforced. I think it's very important for the public generally to understand that and help provide political support for that very basic function.
Also, a big change was 30 years ago when you lent somebody money, and then they paid it back with interest, and that was it. But today, you lend somebody and then they pass the loan on to somebody else and sort of spreads the risk, which is really important.
Well, and interestingly, everyone thought we were really spreading the risk through the securitization of mortgages and other receivables, and therefore we no longer needed to worry about risk. We no longer needed to worry that the underwriting standards had deteriorated because I, the bank, wasn't going to be responsible. All of you investors were going to buy these asset-backed securities and share the risk. And of course, that's not really how it turned out. We weren't really dispersing risk through the system. In some ways, we were concentrating it.
Really interesting. Let me ask you a question. How do you think things have changed already? Sheila, you just made an interesting point. You said we're going to see more changes, and we've already seen a different perception as it relates to the industry, and certainly a different perception on the part of regulators. So I thought in my head, and we've already seen a change in terms of the perception of Wall Street. So up until now, even before we've got the reform, and we know that that's coming down the pike. What would you say has already changed on Wall Street?
Well, I'll just jump in. I think much less on Wall Street, but we certainly see a change in how families are behaving. So we certainly see, we see savings rates are higher than they had been, certainly in the mid-2000s when they were down very, very low. So we do see, I think, a new caution on the part of households wanting to, sort of get their financial lives in order. And I think that's going to be something, I think that's a positive development. It is something we're going to have to be navigating. We can't count on consumers being the engine pulling us forward in terms of a recovery and fast growth. So we're going to have to be thinking about, well, are other things taking the place, like business investment or our net exports? That's going to be important, but it is a change in behavior.
I hope this isn't just wishful thinking on my part, but I believe we're beginning to see a change in how corporations and their boards govern their activities, and that they're more focused on risk management. They're more focused on issues like excessive executive compensation and how that might be driving risk-taking. And certainly we're seeing more activism by institutional shareholders to push boards in that direction. And I think that will overall be a very good development for our economy. But again, I hope it's not just wishful thinking. I hope we're actually seeing motion in that direction.
That's an important point, because that really would be a critical sort of cog in the wheel, wouldn't it?
Yeah, absolutely.
I must say I paused because I was trying to decide whether I should be honest or not, so I will be honest. I really don't see I haven't seen anything change, and I know that's a provocative statement, and I hope Mary's right, but I'm not sure I really have seen anything meaningfully change yet, and I'm very concerned that the culture that led to this crisis is still there. This kind of divorcement of views in terms of what you're paid and what kind of value you produce. I think, I regret to say that a lot of these institutions, I think that's still there. I don't see a lot of support or prioritization of extending credit to support the real economy. I just will have to say that. So I do think further engagement, you can't categorize all large institutions in the same bucket, and some clearly are much better than others in terms of the efforts they're making now to support the economy. But I can't say that I've really seen a significant culture shift, and I regret that, because I think, if to the extent it's not done through market mechanisms, it will have to be done with more prescriptive regulation. I don't think that's helpful. There are signs where some investors have become more active, shareholders have become more active, and I think that's helpful. But even with some of the shareholders, you've got to distinguish sometimes from the short-term and the long-term shareholders and what their incentives might be. So I hope there is some improvement, but I'm not sure I see conclusive evidence of it yet.
It's really interesting. I wonder if you think college and MBA and, well, higher education in general, professors should be involved in this. Because, what's the success when you're in school? The success is getting a recruiter to come to your college or your business school and say, we're going to offer you a lot of money to come. The allure is still compensation. So do we need this to be sort of put on its head to try and get those people to, instead of going to pursue money, to pursue their dream? Like you said, Mary, at the start of this, that you really have to love what you do. So should colleges and higher education leaders be involved in this? In terms, because we all know that, over the years, financial services had become so big, and all of the talented people, or a lot of talented people coming out of schools, were going there for the allure of compensation, as opposed to doing some of the underpinnings that perhaps the economy needed, like in biotech or healthcare or manufacturing or whatever. So should we be appealing to some?
I think so, yeah. I think financial services got too big. It just got too big. It kept consuming a disproportionately large share of our resources, our talent, and I absolutely think it needs to downsize. That is happening to some extent, and that talent needs to be drawn back into efforts that more directly support the real economy. So I think that is absolutely a trend that we need to see and are starting to see.
Here's a question from Jia Huang in Yale. Graduate in 2011. In the not-so-distant past, men completely dominated all aspects of corporate and governmental leadership. So it's inspiring to see that today, increasingly more women are rising to the top. What do you think are the primary drivers of this, and what are the obstacles to this positive trend?
Well, one of the drivers is it had to happen at some point. Good grief. The numbers are just there. I think every time we talk about this, I'm reminded of the fact that 30 years ago, I looked around my law school graduating class, and women were nearly half. And I thought, yeah, we got real problems right now about getting hired in the big firms and whether or not we're going to move forward, but time will solve this problem. If we are graduating in big numbers, if we have those strong educations where half the talent pool will be there. And now we celebrate the fact that, hey, we made it to 2% 30 years later in terms of the big companies. This is nuts. So my view is about this that, yeah, I celebrate, I'm glad that that's the case, but time alone is not going to solve this problem. We have to be affirmatively thoughtful about how it is that women and other groups that are underrepresented on Wall Street. We talked today here about women, but let's face it, we are not the only group that is underrepresented on Wall Street. How it is that those people will be brought in, how all of us will be brought in to the entire sector. And I think part of the answer there is sometimes you just have to be much more conscious about what it is that breeds success. It's not enough to have a good education. We've proven that. We tried it. But it's all the other things. How often do women get a chance to talk? How often do they get invited to speak? How often do you say, I'm going to bring 3 more women in with me? How often when a woman speaks do you say afterwards, that was a good point? The studies are starting to come out now. Take a look at the serious sociology and psych studies on this, about how perpetually we expect to hear men's voices. We listen to men's voices. We think men's voices carry more authority than women's voices. If we don't retrain ourselves as a people, both men and women, then what we'll be doing is we'll have another one of these events 30 years from now, and women leaders in finance will still fit on a very small stage.
What do you do when you have worked on a report or worked on a project and you in your heart of hearts know that this is the right way to go, and you present it to your bosses who may be male? I mean, Christina, you walk into the president's office and you say, this is where I think we should go, President Obama, and he says, no, that's not where we're going to go. How do you push back? Can you push back?
Absolutely.
I mean, seriously.
Have done so. So no, I mean, yes, you have to, I think the key thing is to do the best work that you can and to have a very strong point of view. You make that case, and sometimes you make it many times, and sometimes you can make yourself kind of annoying. And then, at some point, either everybody agrees or you lose and you go on. But I think the important thing, have you tried, right? Have you given it the best chance possible? Have you done your homework in terms of seeing if you can get allies, right? So often, not just to be the lone voice, but to learn to work cooperatively.
It takes courage.
It does, but you don't want to work for somebody who doesn't want you to push back. Because at the end of the day, what's the value of being surrounded by people who tell you what you already think? You haven't advanced the ball. You haven't really engaged the discussion at all that way. You want to work for someone who will let you say exactly what you think and have the debate and the discussion with you. At the end of the day, everybody needs to march in the same direction.
And that's why you're on the team, by the way, because
exactly. But you want people who will give you the opposing view, or you're not going to make good decisions.
I think that's right. I mean, so we get to be the boss now. We have male and female staffers presenting ideas to us, but I think that's right. Someone who will come in and advocate will be prepared to respond to questions, who's really thought through the proposal. I really respect that. I think employees who do that are more valuable than anyone. So people who come well prepared and will stick up for their position, I think that's something I want to hear.
Questions from the audience? Great. Yes.
Commissioner Shapiro, you laid out 3 different initiatives that you have. You laid out the 3 different initiatives that you have, Commissioner. And one of them was in investor confidence and really bringing them back into the fold. I'm on the board of several boards, but Travelers Insurance. And we deal with risk management all the time. We look at this. And I often joke that we need a license to drive a car, but we don't need a license to buy some of these innovative products. Can you talk a little bit about what the SEC can do to really help investors, women, understand about money, but how they can understand about risk, and if there's something we can do in the private sector to partner with you.
Well, I think there's a lot the private sector can and should be doing. And if you look at different financial institutions' websites, some do a pretty good job, actually, of trying to impart basic investor education information. I think that's really critical. You know, I have very much a personal view, not an SEC view, that we ought to have a minimum requirement for graduation from high school of economic and investor knowledge in order to, I mean, when I went to high school, you had to get home economics credit. We would have been a lot better off getting an investor education credit, and I really think that that's something that as a country we ought to be supporting very broadly. The SEC has just actually reinvigorated with some terrific new talent our Office of Investor Education and Advocacy, and we're partnering with the rest of the federal government, but also everywhere we can with advocacy groups to really help people understand the basics of investing, reaching out in the schools, working with different foundations, and I think it's really important. But I also think it's important for us. It's great to teach people and to teach them as young as we can and all through their lives about investing. But we as an agency also need to make sure that we've given them the tools to understand the financial products that are being presented to them. So great disclosure at the point of sale about mutual fund fees and expenses and risks, for example. Or better information about how to vote their proxy once they are an investor and they own shares. How do you vote the proxy? What does it mean to vote a proxy? It's really important that people do those things. So we're trying through our rulemaking, in addition to our educational and advocacy efforts, to really give investors the tools they need to understand the products that are being presented to them.
That's a great point. The problem is nobody ever teaches you this stuff.
Right.
And then you become an adult and you still don't know.
You're embarrassed.
And then you're embarrassed.
Or you learned it in school because you joined the investment club, but it's not part of the curriculum, and that's not a way to get an educated nation of investors.
Absolutely. Yes.
I remember meeting Division of Finance, Alan Beller at the time, and suggesting doing a town hall and getting out to different groups back in September of '02. He now serves on our board of travelers. But I think if there's some constructive way that we could do a partnership, I'd be interested in learning a little bit more.
Great. Yeah, we'll continue talking about that if you want after in terms of partnerships. We want to get as many questions as possible. Yes.
Hello, Kathleen Connell, Berkeley. I would like to really focus on retirement at a point where many of our 401ks have been depleted, and when you look at women in particular, they're spending an average of less than 12 years less in the workforce than men. They have 78 cents on the dollar to the men that they're working with. They're much more likely at age 65 to be single or widowed or divorced. How do we begin to get women to be money smart as it affects their retirement? And what can all of you in your various agencies and positions do to advance this issue of women's security and retirement? Because women are very much on their own as they approach that much more important issue of security.
Well, let me take a very narrow slice of that, because I think the educational efforts are critically important. But we also have to do something to ensure that a lot of the products that are now being innovated for the retirement market are in fact products that are designed to serve the interests of the retiree or the soon-to-be retiree, not designed for the purpose of generating new fees and revenues for the financial institutions that created them. So from my perspective, one of the critical things for the SEC to do is to really understand these products, warn investors about those that they should be warned about, bring enforcement cases aggressively and quickly when the trust and confidence of people investing in these retirement products has been violated.
Christina, how did you learn about money? I mean, you all are all so successful, and we're trying to figure out how it is that others can become so successful. But did you learn it at home when you were young? Did you learn it in school?
I think it is, getting into economics, I actually often tell the story. I was all set to be a lawyer, and I was going to major in political science, and when I went to college in political science, they made us take a year of economics, and it was just like, a light went off.
You loved it.
I loved it, and, so I've ended up learning about money sort of by the back door, right? So you learn the theory of, various things in finance, and then you bring that into your everyday life.
So in school, and you just took to it?
And just took to it.
Elizabeth?
You know, I was going to say on the point about women that you talk about that really interests me, this question about retirement, is that I support everything Mary's talking about the importance of the retirement accounts and kind of the products that are available. But I think that when we talk about financial education, we're starting one level too high. When we talk about things like how people should learn proxy statements and how stock works and so on, because as dull as it sounds, I think it starts with basic budgeting. Yeah. And that there's no one on the side of teaching consumers about must-have expenses, about flexible spending, and about savings. That we are perpetually bombarded about spend, 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 spend. And to the extent there's anything on retirement, a lot of it is fee-driven. Let's face it, that's what's going on. And so I think the whole notion about how we think about the education around money is that we really haven't established core principles. And you know, if you're well off thinking about how to invest your money that you know you should be setting aside for your 401k or whatever, good, those are good decisions to make. But for a lot of people, it's never even getting to that point. And many of the women you were talking about, you know, I'd add just one more if I can. When we talk about retirement, the #1 retirement plan in America is not a 401k or savings account. It's pay off your house and live on your Social Security. The devastation that has been wrought over the past decade by the depletion of equity in homes, that this entire housing bubble was actually accompanied by a decrease in the amount of equity that people owned and a reduction in the number of people as they hit their 55, 60, 65 who had their homes paid off and could live in those homes for the remainder of their lives and live on their Social Security. That has been wiped out for literally millions of families, and we're going to pay the price for that for another generation. So I just want to suggest we have a lot broader thinking to do in this area.
Yep. It's worth just examining how you get smart about money. I mean, I learned it at home. You know, basic things. Don't spend what you don't have. And that stayed with me forever. But you have to start at home and then in school.
We all benefited probably, I think most of us, from having parents who were the product of the Depression.
Right.
And so at home we did learn exactly those kinds of lessons. But this next generation has grown up under very different circumstances.
And some are products of the dot-com boom.
Right.
But we also lived in homes that our parents weren't financed on credit.
Yeah. That's right.
My parents didn't have a credit card not because they were somehow morally superior to everyone else or had more money. They just weren't around. So my parents lived on cash because that was
debt. They wouldn't think of taking on such high debt.
The high debts they took on were medical debts to keep us healthy, their home mortgage, and that was it.
Not to flip a house.
That's right. I don't think my parents would have understood what that meant.
Yes.
Hi. We've established that women earn less than men on average, but we also know, anybody who has a household, that women tend to run the household budget often. And as a personal finance journalist, I go around the country and I meet many unsophisticated people who don't have much money, have no idea how their mortgage works. And then I meet a lot of very sophisticated, very smart PhD, MBAs who also have no idea how their mortgage works.
Yes.
And I wanted to ask, you know, obviously Elizabeth Warren and Senator Geithner have been very vocal about their support for the Consumer Financial Protection Agency. And I wanted to get a sense from you all, how likely will it be to achieve that basic goal of just understandable language, plain vanilla mortgages, credit cards, even payday loans, and what to understand about them? And what is the obstacle, and how can we, either women or people in general, sort of work to get this in there?
Will it be part of the Consumer Protection Agency, this education, financial literacy? Is that, where does this piece go?
I believe the House and Senate bills both have a significant financial education component in the consumer agency. Absolutely.
Because the agency is built on that principle. It is not built on the nanny principle of you can't do this and you shouldn't do that, you're not allowed to do this. It's built on the principle of people being able to read and understand their credit agreements. And the fundamentals for that are consumer education. It doesn't do any good to be able to read them if you can't then integrate them into your own lives every day. So I think it's an integral part of what this agency is about, is to give a home to consumer education, and frankly, right in the place it belongs, where people are trying to deal with credit instruments.
But I think you bring up an issue which is, this is something, if you survey the population, wildly enthusiastic, right? We want to have forms that we can understand. We want an agency that's only job is to look out for consumers. And yet it seems to be one of the most controversial pieces of a very complex bill. And it is, frankly, surprising. I think we are going to have to work very hard to make sure that that stays strong and central.
I would say, too, though, I think there's a strong market argument for consumer protection that perhaps doesn't get as much attention as it should, because if consumers can't understand what they're buying, they can't understand the price, they can't understand the features, they can't make economically rational decisions. If they don't know which credit card is the most expensive because the disclosures are so opaque or the thing is just so complex, nobody can understand it, they will not make an economically rational decision, and that undermines the market. So I think there definitely is a strong market efficiency argument. That's not a term used in vogue anymore, but I think it does support the markets more efficiently to have meaningful consumer protection and disclosure and understandable products.
We want to keep this on time, so we'll wrap it up. Ladies, thank you very much. Professor Warren, Chairman Romer, Chairman Shapiro, Chairman Baer. Thank you, everybody.